Are you a real estate investor who is ready for tax season? Maybe, maybe not. Here's a few comments and a few thoughts for you to get ready for this tax season because it is happening right now. In case you don't know me, my name is Tim Kraus with Cornerstone CPA. I'm the operations partner. We are a bookkeeping, tax, and tax planning firm, and we have about 25 or so bookkeeping clients who are real estate investors, flippers, land, commercial syndications, funds, all those sort of fun things. And we're going to go over a few little quick tips here for you just to consider as you're getting ready for tax season right now. So, first thing, as a tax firm, this one is huge. It is, of course, a duh one. But if you can, gather and organize your financial documents, please. If we do not have the documents on certain properties, like, we won't be able to know what to deduct. Now, if we're doing your bookkeeping, we're doing that throughout the year, and there's a list. If you haven't been answering us, we have what's called an open items list, and it could be substantial, and we will go through it. We will sit down with you, and we will go through it and ask you, where do these different expenses go? Because we want to know where does it go within your balance sheet, profit and loss, the whole 9 yards. What was it used for? So, this would definitely be, contractors, tax payments, receipts, everything. And separate out by property depends. This depends if you have a bunch of rental properties, then having it separate out by property is going to be helpful, especially if they are owned by you personally. If you have a business, it's not as important if they are separated out by property. It is good for other pieces as far as for getting loans and all this other sort of stuff and knowing how profitable your business is. But for tax in particular, it's not as necessary. So, if you can, now again, we use QuickBooks within our company. If you can, though, have some sort of technology to help with this, to help digitize the records so you could send them right to us. We do receive boxes of receipts and things like that still currently, but it is not our preferred style. Also, there's just more that can get missed in that sort of situation. We do have a portal that people upload documents to so that they can see what they uploaded, we can see what they uploaded, and we can both be on the same page. If we don't have the documents, we're not going to know if any sort of expenses for a particular property. We've had this many, many times where people send in where they say, hey, I have a STR, I have a short-term rental, I have an Airbnb somewhere. And then we go, okay, great. They send in everything. Awesome. Like, did you ever repair this building? Did you ever drive to this building? Does the building have a loan on it? There's so many things that get missed in that because it's not organized. So please, everything you spend on the properties, have that in there. Some high-level things to maximize some deductions, some things that people miss a lot of the times, especially if you have just a few rentals, is mortgage interest. Not the mortgage payment is not deductible, but the mortgage interest piece of it is, and then there's the depreciation, and then the property taxes and property maintenance, and also things like utilities, also advertising on the property, also driving to the property. I actually have a separate video where I have a 3-page sheet where I go over a lot of the most common deductions that we see people miss who have rentals. We're going to be linking that right up here for you to be able to look at, to make sure you're not missing those deductions on your rental properties. Rental real estate has a lot of benefits, but it also is not easy. My Opa grew up and he had 50 doors of Class C rentals in Tacoma, Washington, and I was a property manager. I was a maintenance handyman with him for years. It is not an easy business. But if you could help deduct as much as you can from that with all the allowable deductions that you can make it so that you can make more money with your rentals, which is huge. So, depreciation, this is only really a thing if you're going to be doing your taxes by yourself. There are a few different ways to do depreciation. There is straight line, which if you're doing it by yourself, I would highly recommend you do it that way. There's also itemized depreciation. There's also cost segregation studies. I'm going to be making a video on this at some point here, talking about the business case for cost segregations, because they can be beneficial, but they can also be potentially not worth it. It depends on how long you're going to hold the property for and a few other factors, and also depends on your entire income situation. If you have a lot of ordinary income that year or the next year, but if you have a lot of ordinary income, then yeah, it can make sense. But some other times it really doesn't make very much sense. So, and yeah, this will help you. The depreciation is definitely a very good one to help be a paper loss on your ordinary income. So this is also something that we've ran into before, reviewing tax credits and rules. We have some clients who obviously do a lot of rehab, and they don't do the greatest job at keeping all the paperwork for energy efficient updates or upgrades that then could be more deductible, especially for potentially credits. And even on, now this is not for real estate investors, this is if you own a normal just a home. These even, now they're way more restricted, but you can even have tax credits on energy efficient appliances, windows, HVAC systems in your house. It will just be a lot, it's much smaller than it is typically if you own a business with that. But paying attention to those new particular credits and benefits is huge, because a deduction lowers your income, which then means you get taxed on that lesser amount of income. So a deduction, if you have a $10,000 deduction and an effective tax rate of 30% for easy math, that'd be a $3,000 tax savings. A credit goes directly against the amount of money that you owe. So if you have a $3,000 tax credit, it's the equivalent, in a 30% world there, it's the equivalent of a $10,000 deduction. So that's where these energy efficient credits can actually be really beneficial. Also, if you are doing any sort of opportunity zones, which I know those have a lot of criteria, we have a few clients with those. Opportunity zones are very particular in what you have to do and all the rules you have to follow. So for your tax deadlines for your real estate investors, if you are doing quarterly estimated payments, that would be then January 15th. If you are a S Corp or a partnership, which a lot of real estate investors are partnerships, and a lot of flippers are S Corps, depends how much money you're making, where it starts making sense, then it'd be March 15th. And then if you are an individual filer for your 1040, which even if you are a partnership or an S Corp, you will still have an individual return. That'll be April 15th of this year. This is based on the publication 509 from the IRS, which is the IRS's calendar for all of their due dates for 2025. So, and also this is to be nice to your partners. Please, if you're doing a partnership or even an S Corp too, if you can start filing off those K1s, which the K1s are a result of the S Corp return being done or the partnership return being done. So delaying those returns could then hold up your private lenders if you have private lenders in your partnership, which we have a lot of people who do, and they're very concerned about making sure K1s are done on time. So keep that in mind. We cannot send off K1s by themselves. They come from a return. They are not a return by itself. So if you can, as you are preparing for your taxes and your real estate investor, I know it's no fun. I understand. But have some sort of organization method. If you have a Google, okay, let's try this. Please, if you just have a Google Drive folder for each property that you drop receipts into, I'll take it. Please, I'll take it. Like let's start. Can we get there? I know a lot of real estate investors use Google Drive. I use Google Drive. I love it. Let's just start with that. I'll take it. Of course, QuickBooks, Xero, an actual accounting program having us do your bookkeeping. All those are up the hill, but listen, I would love that at least, please. But we'll take whatever we need to do to get the job done. So, something to understand here, as far as maximizing deductions, which I must have missed it here, the difference between repairs and improvements. In general, repairs, you get to expense all of that in 1 year, and an improvement is in general has benefit for more than 1 year and therefore is capitalized. But that is something for your CPA or something that we could talk about that with you. And that's where the itemized depreciation schedule comes into play, and versus straight line depreciation. So make sure you claim your depreciation. If you do not claim your depreciation, the IRS still assumes you claim a depreciation. So even if you don't put it on there, which doesn't mean that you should still claim it, because the IRS, assuming you do it, is not for the tax benefit for you in that year. It's for the tax benefit for the IRS when you sell and they do depreciation recapture. So claim your depreciation, because the IRS is marking that regardless. So, and then if you could find credits, amazing. Credits are great. And then again, staying ahead of those deadlines, which you went over, right here. January 15th, March 15th, and April 15th are the big ones. Then if you go on extension, obviously for your S Corp, that puts you to September 15th. If you go on extension for your personal, that puts you to October 15th for those extensions. So, what's your biggest tax challenge, or what's your biggest tax prep challenge, which is probably organization? But leave it down below in the comments, and I'll try to make a video about that so I can make more helpful content for real estate investors to help make taxes less of a burden, because I know you want to be out there buying and selling deals as I did back when I was flipping land from 2020 to 23. It's a really fun time, but then when tax time comes up, you gotta be somewhat organized to get the max benefit, to make it so that you didn't just work all that time for the government. Anyways, this is Tim with Cornerstone CPA. Again, we do bookkeeping, tax planning. Hope you guys have a good one. Thank you.